And now to that liquid gold. Beer is finally the main focus of Australian brewer Foster's, which delivered annual results today. A net loss of $89 million compared to a $464.4 million loss the year before. Chief Executive John Pollaers is busy turning the business around, but faced with a hostile takeover bid from Anglo-South African giant SAB Miller, his big job is to convince shareholders that his strategy will deliver. I spoke with him earlier. John Pollaers, welcome to the programme.
Hi, Tiki.
Now, very respectable results, really. You held on to your market share, but overall the market has gone down 6%, and you've talked about improvements coming when the economic uncertainty is over. Now, that might not be for some time yet.
I'm a little more optimistic than that, but certainly we are in a difficult economic cycle. What we have seen in the beer category before is we do come out of it and you end up with long periods of modest and profit growth. But we're quite pleased to at least say the turnaround is on track.
You have now exited the wine business, so you've got all these cash flows to focus on the beer business. What signs are you seeing now that Foster's is indeed on the mend? Because you've got to demonstrate this now to your shareholders, given that you've got this hostile takeover bid from SAB Miller.
Yeah, well, I think the great advantage of the demerger of the wine business is it now gives us the first opportunity in 10 years to focus our considerable financial resources on growing the beer and cider business, as well as returning capital to our shareholders. The focus in our business is on getting the execution right, improving the capability and correcting our brand positioning, and that's what we've been focused on.
I see Macquarie analysts today saying the shareholders should sell out. I quote, Foster's already generates the highest sales per hectolitre in the listed world and has the highest margins, so there's little prospect of revenue-driven margin expansion. Where's the upside?
Well, I don't think I'll let him run my money, but certainly I see plenty of upside. You know, as 50% of the beer market and 70% of the cider market, our view is that there's plenty of upside by being much more proactive around our brands and starting to play a total alcohol beverage game. And that means having beer and cider attract more consumers back from wine and back from spirits.
You've also announced plans to strip another $55 million in costs from the group. $45 million of that, I think, is actually this year.
Right.
Where are these cuts going to be made, and are there any staff reductions, given that everybody's very worried about the manufacturing sector?
Well, essentially the cuts are already made. So we started the program in May, and the people who are leaving have either left or will be leaving very shortly. It hasn't just been about people, although we did lose about 20% of our head office team, and there was some changes through the rest of the company. The focus has very much been on right-sizing the company, recognising that we're no longer a global corporation with wine and all the complexities. We can be a very focused, tightly run, listed operating company.
So let's go to the bid, this hostile bid by SAB Miller. It's been out there on the table for some time. There don't seem to be any other takers. The board has said this bid significantly undervalues the company. In what way?
Well, look, under any dimension that I look at the business, you know, you've got the top brand portfolio in Australia, the lowest cost manufacturing base, highest margins in the world, highest returns, very, very efficient capital base. All of those things say this is a wonderful asset, and it's no surprise that you've got global parties interested in it. But when you look at the opportunity of that portfolio and you start to see the turnaround that we're giving it, and the points I made earlier on about opportunities in the category, you have to value it significantly higher than that. If you then throw a share of synergies on top of it, then again, the value is way in excess of the $4.90 that's on offer.
You've also got Corona, which is a pretty attractive business under licence. There's some speculation now that this could actually work quite well as a poison pill, and that there might be something in the terms of that licence that a change of control would actually mean that you would lose the Corona licence. Would that be right?
Well, we haven't commented on the nature of the contract, but you can imagine it's a well-constructed contract and has all of the appropriate provisions. Corona is a very important part of our portfolio.
It's grown, revenue's grown 15%?
15% this year. We've had the brand for 20 years. It's treated with the same love and affection as the rest of our portfolio, and we intend to continue to develop the brand.
You've got big international plans, again demonstrating that you're on about growth. You're saying not going to Fosterise the world, but look, I can still remember the adverts on the London Underground. Do you know the way to cock Foster's? Back to beer and a bigger advertising spend. What's wrong with fosterising the world? Sounds very like it.
Oh, look, I think my point when I made that was that we have a bigger portfolio than just Fosters. So we're going to expand our entire portfolio in markets where they're appropriate. I think the spirit of those days, which is very much about anything's possible, and it is. You know, you've got 10% of most international markets are imported brands. We're not playing in that territory, so there has to be good upside for us in that area.
Well, of course, the man that created all that, John Elliott, recently said about Foster's, they went and sold all the premium assets. We were the fourth biggest brewer in the world. All the brewing business today is just the Australian brewing business now. Do you agree with that comment?
Look, what I would say to John is I'm about restoring this business back to its greatness.
He'd be very happy about that, I'm sure. Last question. The government, after the Blue Scope job losses from yesterday, is calling on us all to buy Australian. It would be pretty un-Australian for us not to have a major brewer in Australia and to be run by a bunch of basically Kiwis and South Africans. Given that you're back to a big advertising campaign, will you use that in your defence?
I don't know that we'll use it, but we certainly are a very proud Australian business with a very long heritage. And my I guess comment to your viewers would be to drink more beer and play your part in the cause. But honestly, our job is just to focus on building the business, doing the right things, and that is how we will look after our shareholders' interests.
I'll look with interest at your response to the party. John Pollaers, thank you very much for joining us.
Terrific. Thanks, Techie.